Ag Day is brought to you by FBN Finance, experienced loan advisors putting farmers first with farmland rates as low as 4.99%.
Wheat seemed to be the star of the commodity markets at midweek. Ag Day's Michelle Rook is back with insights ahead of USDA's Ag Outlook Forum in Markets Now.
Wednesday's market closes were mixed to higher in the grains. The livestock futures also trading mixed, and Brad Quim is with us with analysis. All right, Brad, we started off with some early strength in corn and soybeans, couldn't hold on to that strength despite the fact that you had wheat and bean oil screaming higher. Why? Did we just run up into chart resistance?
The leader over there in that grouping is the beans, obviously, right? Particularly and especially since, we have this agreement apparently with China that they're going to make this promise that they're going to buy a lot more. And the trade is not without some uncertainty about that. China does not always do what they say they're doing. They're a difficult trade partner, and they're unpredictable. I'm trying to be polite. The wheat market, the value that the wheat's at, it's a little easier to bounce when you get from there. I think you had maybe a little bit of Ukraine influence, but maybe a little bit of weather influence here too, as there's a big storm system that I don't grow wheat, but it seems like it's either too dry or it freezes off, or it's something about the wrong time of development. But I know that crop is less than ideal in a lot of cases across that lower wheat belt here in the U.S. So nice to see the bounce there. I wished I could give you something to hang on to on the corn. I know there's a lot of people with corn out there, and then kind of got sidewinded by this report here a while back that found all the acres and the increased yield.
So cattle market made some new highs for the move in some of the contracts on Tuesday with the push of higher cash trade. And then Wednesday, we kind of failed at resistance there.
You get a little overbought, you put $2.5, $3 on it. I'd call this a win, closing mixed. They tried to break it early. We were down 80 and 90, 100 points in the front end of the market early today, only to have it come back and close, modestly higher, nickel higher on the February's anyway. But, and trading what I think is going to be a discount to cash. It's certainly a discount to the last cash that we heard here on Friday, and some nuances of what the cash has already been doing here in the north and a little bit in the south. I'm one of the people that thinks you're going to be at 250 here by the end of the day on Friday, barring something going on with a report or something weird. But market feels awfully good to me.
All right. Well, hopefully that cash optimism can pull us into new highs eventually. Thanks so much, Brad Quimo with Quimo Varlick in Markets Now.